So we got news from February 21st to the 25th. And this dude, this attention-seeking ass, is a fool. Good dude though, probably good dude. So him and his brother over here are getting investigated on insider trading. And the maximum fine you can get for an individual is $5 million or 20 years in jail. Some Martha Stewart shit, you know? Or $25 million for a business. Now, Elon Musk put a little poll out on Twitter asking if he should sell his stock of Tesla, really. And just coincidentally, his brother sold $108 million just the trading day right before. And it's on Invades, you can see that right here on this picture. And it was obviously insider trading. I didn't know how this shit just happened, really. It's just fucking obvious. But Elon even created this trading plan back in September 14th. He knew damn sure he was going to sell his stock too. He just made the poll just to be a fool. This dude always doing fool shit. So Russia invades the Ukraine. Now, the Russian market is dropped by a third. Billionaires losing billions out the ass over there. Now, on February 24th, the market was down close to 6%. And then by the end of the week, the markets were actually up over 1%. So, I don't know, people really wouldn't expect that with Russia actually invading this week. But actually, it showed, like, yeah, fuck it. Like, stocks move how they want, really. And for one, since this year, the S&P fell like over 10%, hit correction territory really, and gold is actually up 6% for the year, and Lockheed Martin is actually up 14% for the year. So that just shows like people were expecting some military action and everything, and it's part of shits. You got investments for that. Not even just that, but commodity prices have been going up because of Russia invading. Mainly oil, wheat, natural gas, and hey, people probably thought they would go up because of inflation too. So it's just two things pushing these commodities up. Now for the first earnings, we got Home Depot. Nice little dividend stock. So sales grew 11%. It beat its expectations in EPS, which was 3.21. Only expecting 3.18. Revenue was up, beat expectations also. Net income was at 3.35 billion. From a year ago, it was 2.86. And they increased their dividend. We already had a nice dividend too, at 1.65. Now it's at 1.9. So Home Depot's still a buy. Analysis saying they got a target price of $420. That's above its price too, so that's good to see. And then you see nice little revenue growth, gross margins, operating margins. Everything's good for Home Depot really, but the stock really didn't respond well to these earnings for some reason. Markets were down that day though too. Home Depot was down over 8%. And Lowe's gave some good earnings too, that maybe they're showing their competitors was a little bit better. But Home Depot is still a good stock, definitely. Monster gave some good earnings, beat estimates in revenue by over 7%. So it was 1.43 billion. That's good to see. And then for the year, had profits of 1.38 billion, and then revenue of 5.54 billion. So the stock dropped a decent amount though. It's dropped over 17% really in 2022, and then S&P only dropped really a little more, over 10. So it's underperforming, but it was at 98, fell to 76. Probably gonna drop a little bit more, but hey, it's a good company. It's probably gonna merge with a good company too. Got Coke on the side. Monster, nice little buy. So for Etsy earnings, they put out better earnings than Shopify, their competitor. Shopify was Just showing basically it was a little COVID play, but Etsy not so much. Beat earnings estimates of 0.76 and it hit 1.11. That's a good little difference there. Beat estimates and revenues also, and then the gross merchandise and net income. Also a nice increase from the year before too, and had nice revenue growth, gross margins, everything really. Etsy, after posting these earnings, went up a good 16%, while Shopify did the opposite and went down a decent amount like that. So even though Etsy's down a good 40-50%, could be a good time to start getting into there. Well, definitely once it's fucking interest rates go up, killing everything. Now Fubo earnings, they had some good earnings too, but didn't really respond so good. Everyone's expecting them to do bad. It was down 18%, but then after the earnings it was only down like 2%, 3%. But they had nice growth in basically everything too. It was a 144 increase in their annual revenue, and then 106% increase in paid subscribers. So I see a lot of ads for Fubo. Yeah, everybody's streaming everything now too, so it's definitely a good play. Fubo was at 35, and at one point it was at 6 now. That's a nice little correction for Fubo. I'll get to there. We got Square or Block now, whatever they want to call themselves. Now they continue to have like monthly active subscribers for Cash App just increase every quarter now. That's what you want to see in a company like this. They beat expectations in basically everything too. EPS 0.27, only 0.19 was expected. Revenue, at 4 billion. Over that, wasn't even expected to be in the 4 billions. Then the transaction-based revenue rose 41% from the year before, and that's 32% of its revenues. Now, Square took a big hit recently. It's probably going to get corrected a little more, but this stock jumped 26% after these earnings. So people should be taking these little jumps though, honestly, as selling. Like trim your like positions a little bit, because they gotta go down. The stocks is still gotta get corrected. Now Palo Alto, this is a stock that didn't really get corrected whatsoever. It's a nice sector to be in. It's like cybersecurity, all that shit, especially with these Russians over here hacking shit. But they had great earnings. Their stock was at 572. It dropped to 455 during these correction times, but boom, went right back up to the over 550. It was at 569. Like, it's a great stock to be in. It beat expectations too in earnings in every sector, and revenue, billings, full year, everything. Good stock. So Alibaba gave their earnings. It wasn't too good, but it's backed by this dude, Charlie Munger, Ryan Bowe. It's a good company, and it's been in correction territory. This and it's had multiple bottoms too. So it's loving the 108 number really, and going up to like 120. So if you're buying at like 108 right now, it's a good sign, honestly. And who knows, China is handling shit different, and with the U.S. market, it's overpriced. China underpriced. I'd rather be an underpriced shit. But it was having record low earnings with like growth really, so that's not good to say, but that's expected because China's over here trying to let their competitors strive and trying to rape Alibaba basically. Because Alibaba was doing so good and just being cocky with it. But yeah, Jack Ma got it. Jack Ma's gotta fix this shit. But hey, they still added like 43 million active customers. They got 1.28 billion altogether. That's nice little loyal customers they got. They got a profit of 17.6 billion. The year before it was 15 billion, so that was growth too. And their gross merchandise value growth was only 8.5%. Usually it's higher, definitely. That was a record low. Revenue only gained 10%. That was the slowest since 2014. And usually it's around 20%. But hey, at least it's showing growth,